Okay, everyone, Assalamualaikum. How are you? Today we are starting a new topic, that is partnership. What is partnership? It's a form of a business, private form of a business in which two or more people start business together. They agree to start business together. That is called partnership. Maximum 20 to 22 partners can be joined, can be work together in a partnership business. So, what do they do? Before starting a partnership, they form an agreement between them. It is also called deed of partnership. What it includes, let's see. Number one, what would be the profit and loss sharing ratio between the partners? What would be the interest on capital that may be charged by partners? What would be the interest on drawings? Who is going to get salaries? Who is going to get the bonus? What is the bonus scheme? And the rules and regulations that has to be followed by all the active partners working in the business. So let's discuss it in more detail, what these elements are in the deed of partnership. Whenever partners invest into the business, that is called capital, so they ask business to pay them interest. So interest on capital is an income of partners and expense of the business. Okay. Number two, interest on drawings. What are drawings? Drawings are the withdrawals from the business for personal use by the owners. In this element, business will charge interest to the partner. So interest on drawings is income to the business and expense to the partner. So interest on drawings decreases partner's income. Next up, if business is paying any salary to the partner, if partner is working and charging salary to the business, the salary would be the expense and income to the partner. So these are the important details that you need to know. Some teachers ask you to memorize the format again. You can do that, but it's wise to understand the concept, understand the meaning, why the interest on capital is being deducted from the profits, why interest on drawings is being added to the profit. So you need to understand these little concepts. So let's begin. In your let's proceed further. In your syllabus, you need to understand how to make income statement of partnership, how to make appropriation statement after income statement continuation, how to make current account, capital account, and statement of financial position in the end. So we are going to do all of these elements in your syllabus. And sometimes they ask you, okay, there is no formal agreement between the partners, so what would be the policy? So you need to understand these 4 to 5 points. You need to learn these 4 to 5 points. In this way, in this regard, when there is no policy between the partners and the partnership is going in an informal way, what you are going to do? So there would be no interest capital charge, there would be no interest on drawings charge, there would be no salary or no bonus to any partners if partners invest any debt in the business. If they give any loan to the business, so interest on that particular loan will be charged at the rate of 5%. And the profit and loss ratio would be equal between the partners. How many partners are there? It would be split equally between them. If there are 4 partners, the profit will be divided by 4. If there are 2 partners, the profit will be divided by 2. So if there is no agreement between the partners, you need to understand these 5 points. You need to memorize these 5 points. Interest on loan by partners will be charged at the 5% rate. Profit and loss ratio will be equal. Profits will be split equal between the partners. There would be no interest on capital, no interest on drawings, and no salary and bonus will be given to any partner. So let's start with the income statement format. Income statement format of partnership, starting from sales. If they ask you to make a complete income statement, you need to follow this particular format. Starting from sales, deducting cost of sales, you will get gross profit. Add other incomes, less expenses, you will get operating profit. What is operating profit? Profit before interest and tax. From that particular operating profit, you need to deduct finance cost. Finance cost is interest cost, interest on loan. You will deduct that amount, you will get profit for there. This is the income statement section of partnership, profit and loss section and trading section of partnership business. So continuing with that, you need to make appropriation statement. What is an appropriation statement? In this appropriation statement, profits are being distributed amongst the partners. So whenever they call you, they ask you to make appropriation statement, you need to make a statement in which the profit will be distributed amongst the partners. The format is that starting from profit for there, you will add interest on drawings. Let's say there are two partners in the business. So the drawings will be charged with the rate given. It will be added to the profit. Interest on capital will be deducted. As discussed before, interest on capital is income to the partner and expense to the business. That's why it is deducted from the profit amount. So interest on capital will be deducted. Salary and bonus given to any partner will also be deducted from here. You will get amount of 30,000 in my example. How this 30,000 will be split amongst the partners. So this is a particular format. Starting from profit, interest on drawings will be added, interest on capital will be deducted, salary and bonus will be deducted, and the amount that is here 30,000 in my example, it will be split amongst the partners. This is the leftover profit of partnership at the year end. So how I am going to split it? Let's say the profit and loss ratio given in the question is 2:1. Partner A with ratio 2, partner B with ratio 1. So doing mathematically, the first partner will be getting 2 divided by total of 2 plus 1. So the partner A ratio would become 2 divided by 3 and partner B's share would be 1 divided by 3. And multiplying it with 30,000, you will get their share of profit. So over here, partner A will be getting 20,000 and partner B will be getting 10,000 out of 30,000 of profit, remaining profit. So this is how we make appropriation statement after profit for the year. If they ask you to make complete income statement, you need to follow the format. And if they ask you to make only appropriation statement, you will start your answer from profit for the year, adding interest on drawings, deducting interest on capital, salary, or in the end answer will be split amongst the partners in the profit and ratio given in the question paper. I hope the format is clear to all of you. To understand it better, let's solve a question. There is a demonstration question. I have solved it to explain it how to use it in the question. So the question says A and B are in partnership since a long time. Policies as follow. Interest on capital is 4%, interest on drawings is 3%, salary to A, bonus to B. Salary to A means partner A salary is 4,000 per annum and bonus is given to partner B, that is $2,000. Profit for the year, capital account balances are given, drawings, current account balance is given. We will discuss current account later on in this video. Let's first solve how to make, let's first understand how to make appropriation statement out of this question. So if they ask you to make an appropriation statement, I am going to start my answer from profit for the year, that is 30,000. Adding interest on drawings, partners A drawing is 30,000. Applying rate of 3% of drawings, you will get 900. Partners B drawings is 20,000. Again, the rate of interest on drawings is 3%. 20,000 into 3% will get you $600. Adding them together, 1,500. It will be added in the profit figure. So your profit will increase up to $31,500. Following the format again, less interest on capital. Capital A of partner is $100,000. Applying a rate of 4%, you will get $4,000 over here. For partner B, 80,000 of capital multiplied by 4% will give you 3,200. Adding them together and deducting it from the profit figure. So you will get 24,300 after interest on capital deduction. Then less salary of partner A, that is 4,000, less bonus to partner B, that is 2,000. I am writing it over here, salary to partner A, salary to partner B, and then the leftover profit is 18,300 in my question. So this leftover profit will be split amongst the partners in the ratio 3:2 that is given in the exam. So first partner will get 3 divided by total, that is 5, and second partner will be getting 2/5. Multiplying it with 18,300, partner A will get $10,980 and partner B will be getting $732. I hope it is clear to all of you. So it's an easy concept how to make appropriation statement starting from profit and ending to the coming to the ending figure of profit and split it that into partners profit and loss sharing ratio. So first of all, you need to understand what is a partnership business. Partnership business comprises of two minimum partners and maximum 20 to 22 partners. They work together, they form a partnership. They make the policy between them, they follow the policy, and in income statement after finding profit for the year, you need to make appropriation statement in the continuation. And how to make appropriation we have also illustrated with an example. So next up I am going to start with the current account. So let's begin with the current account lecture. Okay guys, let's start with current account lecture. What does current account show you? In partnership, partners used to make current account at the end of the financial year. What does it show? It shows the income position of the partners. So the nature of the account is income nature. It increases on credit and decreases on credit. Whenever the income of any partner increases, it will be recorded on the credit side, and when the income is decreasing, it will be recorded on the debit side. So let's begin with the format of current account. You will be given balance BD's figure. Let's say there are two partners in the business, partner A, partner B. So I am drawing two columns on the debit side and two columns on the credit side. So starting from balancing figure, it will be given in the exams. If they give you a balance BD on debit side, you will post it on the debit. It will be given on the credit side, you will post it on the credit side. On the credit side, all those entries will be recorded in by which income of partner increases. Let's say if the interest on capital is given to the partner, income increases, recorded on the credit side. Interest on loan by the partner will be recorded on the credit side. Share of profits, salary, bonus will be recorded on the credit side of current account. On the debit side, total drawings withdrawn from the business, it decreases your income, recorded on the debit side. Interest on drawings will be recorded on the debit side. Share of loss, either you will get a share of profit or you will get a share of loss. So share of loss decreases your income, will be recorded on the debit side. Share of profit increases the income, will be recorded on the credit side. After recording all the transactions, you need to balance it off. Balance CD, balance BD. Let's say the balance BD figures is now important to interpret. Is it a positive balance or is it a negative balance? Let's say the balance CD of partner A is coming onto the debit side with $2,000. So balance BD on the credit side will be $2,000. What does this $2,000 mean? It means that partners has a positive income of $2,000. He or she can withdraw it more from the business. The income which is drawn for the year is less than the income that is being generated by the partnership business. So the credit side balance CBD shows that the income position of partner is in a positive. Okay, so in SOFP, when I am going to put this figure, it will be a positive figure, and it will also increase the capital of the partner. Okay, example number 2. Let's say the balance CD of partner B is coming onto the credit side, that is $1,000. The balance BD would be on the debit side, $1,000. Now what does it mean? It means that partner has withdrawn more than the income he or she has been generating in the business. $1,000 shows a negative balance. It decreases your capital. On the SOFP, it will reduce your capital balance. So in exam, it is very important to follow the balance BDs. And if the balance BD coming onto the credit side, it is a positive figure. It means income can be withdrawn more. The income is in positive, and if the balance BD is on the debit side, it means the income is in negative. The partner has withdrawn more than the actual income that is being earned in the partnership business. I hope this lecture is clear. Coming on to the SOFP format, statement of financial position format, it is the same, only the difference is in the finance by section, the equity section. Starting from non-current assets, we add current assets, we will get total assets figure. Total assets of the business. The first half of the SOP is done. In the second half, current liabilities, non-current liabilities, and finance by section. There is only difference of finance by section in the partnership business. I am going to use two things over here, that is capital account and the balance PDs of current account. So after drawing your current account, you need to put it on the SOFE statement format. The capital balances will be given in the question. The balance BD should be followed in the current account. If the balance BD is on the debit side, you will put it in a negative bracket, and when the balance BD is on the credit side, you will put it as a positive figure. Adjust them together. Current account balances, capital account balances, adding them together in liabilities, you will get a balancing figure. This figure should be equals to total asset figure. So this is how you make a statement of financial position of a partnership. So you need to memorize this format as well. There is only slight difference in finance bisection of partnership business. You are going to use capital account balances and current account balances to balance the SOFP at the end of the financial year. So this lecture of partnership is done. So I hope you like this lecture. Kindly like it, share it with your friends, with your family members, and kindly acknowledge by pressing ring bell icon to get upcoming videos in the future as well. Thank you so much.